in your packet on the left are a few charts. And if you look at the chart, it actually has about 10 or 11 columns, and your green line on Jefferson going through it. If you look under the column with the label 1 in parentheses, the one that's titled pool layer, you can see that Jefferson County was roughly $145,000. So of your total premium, about $145,000 is going to buy this retention layer, this pool layer, okay? The next $115,000 is to buy your share of this second layer. And then finally, if you can add the third column then, at roughly $83,000, is your share of these three amounts, okay, for Jefferson County. Then the $9,200 is basically your share of this excess premium, and the excess premium went up about 80%. Now, there's never been a case that's ever penetrated that, so it isn't a loss history that's generated that increase. It really is the marketplace of the insurance companies worldwide. There just really is, there's no capacity, there's no investment options, so they haven't a lot of capacity that can offer. They have to collect everything by premium, and as a result, they've basically held a gun to our head and said, if you want this coverage, this is what it's going to cost you, and we go accordingly. So as you can see, there are reinsurance.
So I think that's a real important point, that insurance companies get their money basically two ways. One is by premiums and the other is by investments, and if they can't invest and get a big enough return, they have to increase premiums, and we see that in all insurance policies, and so then that again is affecting us when we buy insurance.
That's right. That's exactly correct. You'll see it in your private environment, you'll see it in your other insurance components here. Hopefully, we're stabilizing the worldwide economy, and the opinions are at this particular point in time that this amount is probably going to stabilize. It will likely come down. Whether we'll see it come down a year from now or not is still a question. It just really depends on what the worldwide economy does. But it should come down over time. Likewise, we suspect that this reinsurance will come down. It'll come down when we can demonstrate that we are, quote, a good client in that particular industry. The real key is this is reinsurance. The pool is actually managing the claim, and it has full control of the claim. But when it pays out at any amount over $100,000, then it sends the bill to the reinsurance company, and the reinsurance company by law is obligated to reimburse the pool at that particular quarter. They just determine what they need to accept that risk. Sometimes they gain, sometimes they lose. I said that the carrier here paid out roughly $12 million in the last 12-month period of time, even though they only received a $2 million premium. But they've received that $2 million premium for about the last 5 or 6 years. So they're upside down, but they're not significantly upside down. It's a matter of restructuring is what it amounts to, coupled with, David, as you mentioned, the issue regarding no investment market to speak of to be able to recover other than through premium itself. So the reinsurance total went up about 46.5% overall. You can see, again, from your chart, much of yours is split out, but if you'll go, let's pick, if you'll just refer down to Spokane. As you can see, Spokane is one of those $500,000 deductible counties that they only come in at this level. And as a result, you can see in Spokane's case that their premium, their share of this particular amount, these three items, is over $600,000. But in total, their premium went from $457,000 last year to $885,000 roughly this year. So they almost went up 100%. It went up about 90% is what it amounted to. But again, they don't participate in the amounts up here that only went up modest, if any at all. Okay? Is that reasonable, good enough explanation?
And this is affecting every business out there in the same way.
Every business in the same way, exactly. So in the other elements, I want to concentrate on this number. The pool, I guess we're proud to say that this is the first year that we've had to have an increase in 6 years. This amount, this bottom line, was the amount that had been collected since 2004. Unfortunately, if it weren't for those renewals that we just didn't have any control of, we wouldn't have been pursuing an increase. But we had to because the cost of those premiums were more than what we could support within this bottom line total. But this bottom line total of the expiring year is the same amount as what the bottom line total was for the 2004 collection. Should we have tweaked this and added a little bit each year in order to be able to make it easier this year? Well, if you know, everybody could judge by hindsight, would all be very much better. But the objective at that time was to leave the monies with the counties. There really wasn't anything to justify the extra increase in the pool at the time, other than we can expect an increase coming sometime in the future, so let's set it aside now so that we have it for that time.
JSILP stands for?
Joint Self-Insurance Liability Policy. Sorry about that. Acronyms, we need to try to avoid them, but that was too much to stand up. So this is for the liability program only, this isn't the property program, okay? David?
You're back on again.
Oh, that's right. We're in the condensed version. Since this is our annual visitation to the counties, and the board of directors asked us to go out and visit with each one of the members and give them a report on the status of the pool, we want to take this chance to be able to give you an update as far as the pool goes itself. The operations, the staff, the cost associated with the board of directors and the executive committee, the training, all of those elements going together, we have about a $1.7 million operating budget. And this doesn't include the cost of the insurance that is purchased on behalf of the membership. Total assets for the pool, by the way, this is at the end of the third quarter, so it's the end of June as opposed to the end of September as well. Total assets were at $22 million. That was an increase of about 11% over the prior year. Claims reserve. Now, if you keep in back of your mind that chart that we were talking about, this is the claims reserves relative to this portion that was in yellow over the years. Stood at $7.7 million. That was decreasing slightly, and again, part of the reason is that the pool's board of directors in 1999 chose to lower the retention from $500,000 to $100,000. Strict business decision. It was cheaper to buy the reinsurance than it was to pool it. It still is, because if we use the actuary's estimates for retaining, if we would raise that retention back to $500,000 from $100,000, we would actually have to increase our collections by $3 million to satisfy the requirements of the actuary and the state risk manager for reserving purposes. But the total reserves for all known claims that were outstanding as of the end of June were $7.7 million. This corridor reserve is just another program. It's a relationship that the pool has with that first layer reinsurer to share part of the piece. We have $4.7 million on reserve. The real key is this element here, the next two items. The net assets were $7.4 million at the end of the third quarter. That was roughly a 16% increase over the year before. Much of that is because of the standpoint that we're able to collapse this area more, and we've been able to take advantage of this particular area. That $7.4 million on net assets, I like to refer to it as members' equity. It's the equity of the pool. If the pool were to dissolve and go away, this would be the amount that would be proportionally distributed amongst the membership. By virtue of being a member of the pool, you have an ownership interest. If you choose to withdraw from the pool, by the terms of the interlocal agreement, you actually surrender your right to anything that's in the net asset. You don't surrender your responsibility to the reserves, to the amount that is needed for claims, but you do surrender your right to the member's equity.